Welcome to the Fear and Greed Weekend Edition, the week that was a wrap of the biggest stories over the past 7 days. I'm Sean Aylmer. Well, it was a big week for fighting premiers, big week for share markets, big week for Apple, and for pet cemeteries. It was a good week for Wall Street with indices hitting record levels, spurring on investors its confidence in the recovery in the world's largest economy. S&P Global came out this week and said it expects the US economy will expand by almost 7% next year, which would be the best in 40 years. Leading the rally on Wall Street this week were the tech stocks. Apple is now worth $2.5 trillion US dollars. That's with a T, trillion US dollars. That's more than all the money in superannuation funds in Australia. That's more than the S&P ASX 200 combined. In fact, that's more than the national output of Italy. European markets continue to travel along nicely. Like the US, there's plenty of confidence in the economic recovery in that region. The local market, though, is a little more circumspect. Earnings season finished this week, and so the huge swings in share prices calmed somewhat. While the earnings season was pretty incredible in terms of results, record profits from many companies, $30 billion in dividends and $20 billion in buybacks, commentary about the current financial year was much less enthusiastic. Companies just aren't so sure about how the lockdowns will hit their revenues and bottom lines. In some sectors, notably the big three iron ore miners, prices have tumbled in recent weeks. In others, like many of the retailers, people just aren't spending as much money. The market ended higher for the month of August, making it 11 months in a row. Now, that hasn't happened since 1943. Pretty good outcome. But the next few months could be just a touch bumpy. It was a very, very big week for international news. The United States finally withdrew from Afghanistan after 20 years of occupation. The last few weeks have been fairly horrific, and more than 120,000 people have fled the country. The US is pleased to be out, fair enough, or as the Taliban put it, the US has been defeated. I'm not so sure about that, but you do wonder the difference the last 20 years have made. We'll find that out in coming months and years, I'm sure. Hurricane Ida devastated New Orleans on the 16th anniversary of Hurricane Katrina. More than 1 million homes and businesses were without power, though the destruction wasn't anything like Katrina, which was the costliest hurricane ever recorded. Beijing set its sights on the Chinese entertainment sector. Following recent crackdowns on technology companies and education providers, the country's anti-corruption watchdog hit out at celebrity culture. I kind of agree. The COVID news in the US wasn't good, with cases soaring through unvaccinated communities mostly. Cases also rose in New Zealand, and the lockdown in Auckland was extended for another fortnight. Eurozone inflation jumped 3% last month, with German price rises up 4%, their highest level since 1993. Now, central banks have been arguing that the current wave of higher prices is transitory due to COVID-19, but not everyone's so sure about that. During the week, South Korea forced Apple and Google to open up their app stores to other payment systems. Then Apple said it would allow developers of some apps to link from their software to external websites for payments. That's a very big concession from the tech giant. And the US Supreme Court made a ruling that allows Texas to enact a law banning abortions once cardiac activity can be detected, which is after about 6 weeks of pregnancy. The vast majority of abortions occur after this point, and the ruling, which makes no exceptions for cases of rape or incest, is a major win for the anti-abortion lobby. In local news, the political fight around the rollout of JobKeeper just kept going this week after the Parliamentary Budget Office released figures that said $13 billion in payments went to businesses that recorded increases in revenue. Popular support for the federal coalition fell to its lowest level since the last election, according to Newspoll in the Australian newspaper. On a two-party preferred basis, Labor now leads the coalition 54% to 46%. But the personal support for the Prime Minister, Scott Morrison, has lifted. Poor old Anthony Albanese still lags. The superannuation regulator released its inaugural performance test results for the sector, and 13 funds failed. Those funds will have to send a letter to the 1.1 million members affected, telling them their super is in a product that's performed poorly. It was an interesting week for the housing market. There's plenty of buyers out there, but not quite as many sellers. Spring selling season begins this weekend, but the number of houses scheduled for auction in Sydney and Melbourne has tumbled. Prices are still rising, but not as fast as they were earlier in the year. CoreLogic figures show Sydney prices are up nearly 20% so far this year. Brisbane is up 16%, Adelaide 13%, and Melbourne is up 12%. It was a very big week for the economy, a huge week for the economy. Economic growth during the June quarter printed at 0.7%. The result was better than forecast, and Australia looks to have avoided a double-dip recession because we know this quarter will definitely go backwards. While the June quarter was welcomed, no one was getting too excited because the lockdowns kicked in after June 30. There are signs that the home construction sector could stumble in coming months after building approvals fell by nearly 6% during July and were 33% below their peak in March. The latest run of figures reflect the end of the home builder subsidy back in March, which brought forward approvals. And Australia's trade surplus hit a record $12.1 billion during July. In corporate news, Crown Resorts posted a $262 million loss last financial year thanks to rolling lockdowns and higher costs around restructuring the group. Crown has had a horror 12 months, fronting major inquiries in New South Wales, Victoria and Western Australia, as well as having to close facilities because of COVID. Next month, the Victorian Royal Commission is due to report, and that's when the group will find out whether its licence in the state will be suspended. Harvey Norman said earnings last financial year jumped 75%, but the retailer cut its dividend, saying the next few months looked uncertain. The group will repay JobKeeper payments. Aussie Post delivered an annual profit of more than $100 million on the back of record revenue, but then said the mail wouldn't be collected from this morning through till Tuesday night in the ACT, Victoria and New South Wales. There's a huge backlog of parcels and letters in distribution centres, and there's hundreds of staff in isolation. Now I get to the point of the program where I go through the biggest story of the week, the sleeper story, the most remarkable story, and my favourite story. The biggest story of the week was all about squabbling premiers. In one corner, you have Gladys Berejiklian from New South Wales and Daniel Andrews from Victoria. In the other is Anastasia Palaszczuk from Queensland and Mark McGowan from Western Australia. They are fighting over when to reopen economies, and the notion of national cabinet unity went out the window this week. New South Wales and Victoria are in the grip of the COVID crisis, with numbers rising sharply. Yesterday, both hit new records for the current wave. Their premiers argue that we need to learn to live with COVID and reopen economies when vaccination rates hit 70% and 80%. Queensland and Western Australia have had very few COVID cases throughout the whole pandemic, and they don't want to reopen until there's zero cases. If New South Wales, in particular, waits till zero cases, it won't reopen at all. What's at stake is the livelihood and jobs of hundreds of thousands of Australians who rely on the national economy. Telstra Chief Executive Andy Penn made a welcome incursion late in the week, calling on governments to work together. This is a national crisis. COVID is the biggest story of not just this week, but the year, and last year as well. Politicians need to do much better. The sleeper story of the week is a bunch of stories to do with the environment. The first one is about a Commonwealth Bank shareholder taking the bank to court to gain access to documents detailing its decision to finance oil and gas projects despite their potential to breach the Paris Agreement goals. The second comes from data released by the Responsible Investment Association Australasia. Total funds overseen by ethical investment funds jumped 30% last year and now total $1.3 trillion. That's about 40% of total funds invested in Australia. Add to that the big drop in BHP's share price, 7%, when boss Mike Henry said the group wasn't getting out of oil and gas. Okay, there are a few other things at play there, but his comments contributed to the slump. Put that in there as well, and you get a picture of an investment community very keen to go green. Those close to the sector have been talking about it for years, but the tipping point may have finally arrived. The most remarkable story is how rich Andrew Forrest is. He banked a $2.6 billion dividend cheque for the last half year, to go with a $1.4 billion cheque for the previous half year. That's because the company he founded, Fortescue Metals, announced a $10.3 billion profit, more than double its previous best in 2020. Dr. Forrest owns 36% of the company, which has benefited from sky-high iron ore prices, strong demand out of China, and a pretty ordinary performance from major competitor Vale in Brazil. Dr. Forrest owns the second most remarkable story of the week as well. In a speech, he linked welfare and mining royalties to the tragedy of youth suicide and social breakdown in Aboriginal communities. He said he'd seen the wanton destruction of Indigenous culture and livelihoods through welfare and royalties. Dr. Forrest may hold the view, but surely he realises his influence around the nation and comments like that do not help reconciliation efforts between the traditional owners of the land and the rest of the community. My favourite story of the week comes from the funeral group InvoCare. Admittedly, I'm slightly obsessed with this company, which owns White Lady Funerals and Simplicity Funerals, among others. It announced a return to profit. Good on them. But where business is booming is in pet funerals. It's bought pet cremators in New South Wales, Victoria, and Western Australia. And people actually use them. The whole COVID pet thing is increasingly interesting. Did you know in the US there's an epidemic of pet anxiety? I kid you not. Dogs, used to having people around the house, are suffering separation anxiety as humans head back to work. Apparently, it was the opposite for cats, who found it much harder when people stayed around the home. I have the New Yorker magazine to thank for this fascinating insight. Moving on to this week's interviews, Matthew Kidman from Centennial Asset Management kicked things off on Monday. He helped us wrap up the earnings season, and Matthew ran through a number of the stocks he likes. Adam Smith from Saxo Markets came in on Tuesday to talk about contracts for difference, or CFDs. Many people lost money using them during the global financial crisis, but the laws have changed and they're emerging as a viable investment option. On Wednesday, I spoke to Clayton Howes, the founder of ASX-listed lender MoneyMe. MoneyMe is a fintech taking on the big banks in the world for consumer lending, and it's growing quickly. Shane Oliver, Chief Economist at AMP Capital, was my guest on Thursday morning. Shane has a great ability to turn economics into English, and we had a great chat about the economic growth figures and the outlook for the economy. Robert Giles was my guest yesterday. He's the boss of SPC, the first major business to mandate vaccination of staff. It was a great chat to Robert about why he made the decision and the staff's reaction. Since then, both Qantas and Virgin Australia have mandated vaccinations. It was a great week for another reason. Winter ended and spring began. And if you get up at 4 a.m. every morning like we do here at Fear and Greed, the end of winter is good news. If you want to listen to any of the interviews or indeed any of the shows over the past week, all are available on your favourite podcast platform or at fearandgreed.com.au. And don't forget that tomorrow I'll be back with Michael Thompson and Adam Lang from the Fear and Greed team to have a bit more of an in-depth look at some of the news around the place. I'm Sean Aylmer. Have a good Saturday and a great weekend.